Our next guest is Jack Rybicki, Managing Principal of Private Capital for CliftonAllenLarson. Jack will provide additional information on the PPP from an accounting and tax perspective, as well as preview an upcoming adjustment to the program. Specifically, it's for businesses with 20 or less employees, as has been talked about to this point. Jack, the floor is yours.
Carolyn, thanks so much. And I'll try to get through this quickly because I see we do have some questions coming into the chat, and I want to make sure we do have the opportunity to get to those. So there are choices on the accounting side of things. And so this would be for people who prepare their financial statements in accordance with US GAAP. So there are two different ways to account for it. One, and the easiest way, is to account for it as if it were debt. That's the simple answer. You put it on your balance sheet as a loan, and then once the SBA grants forgiveness and funds to the bank, and you're notified that the loan has been satisfied by the SBA, that would be when you would remove it from your books from a GAAP perspective and recognize debt forgiveness income. Now that is one treatment, though. The other treatment, and because privately held businesses don't really have an accounting method in US GAAP for how to deal with governmental grants, for-profit businesses can analogize to either nonprofit accounting or international standards. Under both of those, you can get to a situation where in your 2020 financial statements, you would remove the loan from your books and recognize that income, so to speak, for financial reporting purposes, if you have satisfied the terms of the agreement, right? And in that case, that would really mean that during your covered period, as was covered earlier, you incurred the eligible costs and you expect to get 100% forgiveness of your loan. And so if you can go through that analysis, you can analogize to either nonprofit accounting for governmental grants or the international standards on how to account for governmental grants, and remove that liability from your balance sheet. Now I want to make sure we go into the tax implications, because we want to be clear that that's financial reporting in nature, and your tax return will reflect something very different from that. And so we got some great news in the Consolidated Appropriations Act related to the taxability of the PPP. We knew from the CARES Act that the forgiveness of the loan was never going to be subject to tax. That was very clear, and that was laid out in the original CARES Act. However, the IRS had come out with a couple different interpretations where it appeared that the expenses paid by those forgiven funds, since the forgiven funds were not going to be subject to tax, those expenses were going to be deemed to be non-deductible. Now, fortunately, Congress said that was not legislative intent, and as a result of that, in the Consolidated Appropriations Act, they clarified that no, what congressional intent is that both the income from the forgiveness of debt was non-taxable, and the expenses paid using those funds were going to be deductible. So that was great news for PPP borrowers. Basically, that means that this is a tax-free forgiveness program rather than a program that was only going to generate net of tax benefits. So 100% of your dollars that you received are going to flow to, so to speak, the bottom line and be available for use, rather than having to pay some of that back to the federal government. Now, I do want to point out that the Consolidated Appropriations Act also helped out in a couple other ways that we didn't expect. So, we mentioned earlier that the EIDL program is out there. There was a grant in advance, the emergency grant there of up to $10,000. We learned that $10,000 is also not going to be subject to taxation. And for those of you who already participated in other SBA lending programs, there was a great benefit out there that the SBA made your loan payments for you for 6 months, and that was also extended by the Consolidated Appropriations Act. What we learned in that is that those payments made on your behalf by the SBA will also not be subject to taxation. So a lot of really good news from a tax perspective, that these benefits that were part of the CARES Act or the Consolidated Appropriations Act are really just a dollar for dollar benefit and will not be subject to taxation. So I do want to mention the employee retention credit as well. For those of you that participated in the Paycheck Protection Program, before the Consolidated Appropriations Act, the employee retention credit was off the table for you. However, the CAA did provide that you can now take advantage of both the Paycheck Protection Program and the employee retention credit. That's caused a lot of our folks to go back and analyze 2020 now to see if they would qualify. And you can qualify if you had a greater than 50% reduction in your gross receipts during any calendar quarter, or if you were partially or if you were impacted by a full or partial governmental shutdown order. Now, the analysis is fairly complex, and you have to make sure that you don't use the same dollars to get PPP forgiveness as you do for the employee retention credit. But what the credit allows you to do in 2020 is for up to $10,000 of wages per employee for that period of time that you qualify, you can get a 50% credit. So up to a $5,000 credit, which can be applied against your payroll taxes. And so for many of you who already paid those payroll taxes, you can file a Form 941X and get a refund of those taxes if that impacted you. So just a great benefit for going back into 2020. Now, the Consolidated Appropriations Act also brought in a great benefit for 2021. And so for the first 2 quarters, if you are eligible, the credit has actually been increased to 70% of up to $10,000 of wages on a quarterly basis now. So you could potentially earn up to a $14,000 credit for your payroll taxes. And again, this is a refundable credit, so this could put money back into your pocket. And they made the terms a little more generous too. You only have to be able to demonstrate a 20% decrease in revenue when compared to 2019 in order to qualify for the 2021 credits. Or you can still be impacted by that full or partial governmental shutdown order as well. And for 2020, you had to be paying employees that were not working in order to get the credit, unless you were 100 employees or less. For 100 employees or less, you could all wages would qualify. In 2021, that threshold to just paying employees and having those wages qualify was increased to 500 employees. So a larger swath of companies will now qualify for the employee retention credit. So encourage you to do this. This is not a credit that goes on the tax return for the owners. This is actually on the tax return of the entity, the 941s. And again, as I mentioned, is a refundable credit to you for payroll taxes that you've paid. So it can put money in your pocket pretty quickly. So encourage everybody to look at that. Loan forgiveness applications, I won't go through this because I think Eric and others have done just a great job going through that already. The one thing we do stress, though, is there are multiple applications, and so it is very important to work with your bank and your CPA to identify which application is the right application for you as you go through this, right? So there's the 3508, which is the long form that is generally going to be, for more complex or larger loans, those that had either wage reductions or potential FTE reductions. There's the EZ form. So if you didn't have wage reductions and you were able to maintain your employee count, or if you were able to demonstrate you met the safe harbor that's out there that you could not operate at pre-COVID levels because of governmental regulation and orders, you can use the EZ form. And last but certainly not least, for our small businesses out there, the 3508S form is there for loans under $150,000, offers a simplified forgiveness process. It's a very simplified process if you're under 50,000 because you are effectively exempted from the wage reduction and FTE reduction tests. However, if you are in that 50 to 150 bucket, you still have to apply those tests to determine what your forgiveness amount is that you're eligible for, but you don't have to show all of those calculations on those forms. So that 3508S form, I do want to just go into a little bit more information there. It is a very simplified form. It's a one-page form effectively, and it just requires the borrower to certify the number of employees that you were able to retain, the estimated amount of the PPP loan proceeds that were spent on payroll, because it is important, because that was the crux of the program. At least 60% of your dollars need to be spent on payroll related costs. It wants the total amount of the loan and some certifications that you complied with the PPP terms. Now, you're not even required to submit all the documentation, although some banks may want you to do that. So it is important to coordinate your forgiveness efforts with your bank, because the banks can somewhat set their own rules in terms of the information they would like to collect, which could be more than the SBA is requiring, but the banks in a lot of cases do want to retain that information for their records in the event the SBA comes back at a later time. So a couple forgiveness matters that I wanted to just mention, and some of these had been mentioned earlier. The covered period, we did get relief on that, and you can now choose that. There was a concept called the alternative payroll covered period with the CAA and the ability to choose your covered period. That alternative covered payroll period has been eliminated. I mentioned earlier that forgiveness amounts must be spent at least 60% on payroll. It is important to do that, but that's where maybe some of the planning comes in, where you can maximize your non-payroll uses for the forgiveness application, and then use some of those payroll dollars to apply for the employee retention credit. So again, some planning that needs to be done there. For larger borrowers, there is a loan necessity questionnaire that will need to be completed, where the SBA will be evaluating the borrower's certification that they made that the economic conditions at the time they made the loan application were such that they needed the loan or had concerns that they needed the loan to continue operations. And we mentioned earlier that the EIDL grant is no longer going to reduce your loan forgiveness. So a really nice piece there. Last but certainly not least, I want to cover just briefly some of the things that are in the President Biden's proposed America Rescue Plan related to small businesses. So the overall cost of the plan is roughly 1.9 trillion, and it includes a variety of different, things, from paycheck or from amounts coming to stimulus checks coming to individuals of up to $1,400, extension of the unemployment benefits, things of that nature. But I do want to cover the small business components that are out there. So specifically, there is going to be expanded eligibility for nonprofit organizations to participate in the PPP program. So that is nice. And there's some more small business set-asides that are being designated in there. So, as Kevin mentioned earlier, we've got this new 14-day program that's targeted for businesses that are 20 people or less. There's going to be some more set-asides for PPP in this American Rescue Plan. Now, the targeted EIDL emergency grant, which was that up to $10,000, for those folks that didn't receive the full $10,000, they will be eligible to do that. And for small businesses that can show that they were severely impacted, there will be additional supplemental payments of up to $5,000 that can be available if you can demonstrate revenue declines of greater than 50% for those companies that are 10 employees or less.